Oh, that's real good.
Hello everyone, and welcome to our channel Penny Lesson. We talk about everything finance, from tips on making money and proper investing to news about the different economies and situations affecting the global markets. The goal of this channel is not only to teach you how to be more financially responsible but also to teach you how to be more aware of global events. So why not just sit back and relax while we tell you what's happening in the finance sphere? Be sure to subscribe to my channel and hit the notification bell to be constantly updated on my latest videos. Remember, one penny lesson a day keeps being penny less away. What would you say if you had a shareholder who asked you a question about gold and your thoughts about it? This video features what Warren Buffett and Ray Dalio, two big names in the field of investing, think about gold. Why not listen to their exchange and maybe have a better idea of whether to invest in gold or not? When Buffett gained control of Berkshire, its shares were trading for $15 each, while the price of an ounce of gold was $20. Gold is now $1,600, and Berkshire is $120,000 at that point. According to Buffett, if you purchase an ounce of gold today and keep onto it for 100 years, you will still just have that 1 ounce of gold, and it will have done you no good at all during that time. A farmland purchase of 100 acres will yield annual yields for you. You can purchase additional farms with that cash. There are several things you can do. You can depend on it to provide you with goods for 100 years. At the end of that time, you will still own 100 acres of farmland. At the beginning of 1900, the Dow Jones Industrial Average was trading for $66. Gold was then $20. The final cost was $11,400, but you would have received dividends for a century. Consequently, a good productive asset will eventually outlive a poor productive asset. However, Ray Dalio believes that because gold diversifies a portfolio, it should make up part of everyone's holdings. It is a substitute for money. We currently have a scenario where having too much debt makes it simpler to print money to pay it off. As a result of all of those factors, a certain amount should be in gold. When questioned about Buffett's generally unfavorable opinion of gold, Dalio said he thinks Buffett is seriously mistaken. Ray compares gold to money. It's an alternative to cash, thus, it's not the ideal investment over the long run. It performs somewhat better than cash over a protracted period of time in the long run. However, you need money when your economy is in a financial crisis and your monetary system is fiat. Debt is a pledge to pay back the money, correct? Therefore, consider each of those devaluations that have occurred. President Roosevelt closed the banks in March 1933, opened them again, and said, "You can have your money," and then the link with gold was broken. As a result, that time period's history shows that money may be made. Gold is a fairly scarce metal. It's an alternative that should but shouldn't take up a significant portion of everyone's portfolio. Land property. According to Warren Buffett, you may hire someone to perform all the labor in exchange for a share of the produce. You still have the property where you get the entire harvest even if you sit back there for 100 years and only receive a portion of the produce. He is adamant that farmland will turn into stellar investments in gold over the next 100 years. Warren thinks it's really intriguing when asked about his thoughts on how gold investors might become annoyed. People won't get upset if you claim that bonds are a type of bad investment on CNBC. Almost any investment may be criticized, and nobody cares. However, when you bring up gold, it reveals something about their reasons for possession. They seek agreement from others. They want others to feel the same level of fear because that will increase prices. They're right to be wary of paper money. Incidentally, after all, their fundamental premise that paper money will depreciate in value over time is true. However, Ray Dalio thinks that every portfolio should have the appropriate level of diversity. Consequently, adding gold to a portfolio is a wise strategic asset allocation decision. He thinks it should always make up a certain portion of a portfolio since different environments affect portfolio diversification differently. Additionally, he believes that the current environment is riskier. It becomes very difficult to stimulate the economy in that climate. Additionally, there is a desire to lower currency values. Consider a bond as the currency right now. Therefore, when one holds a bond or other debt instrument, they get a large sum of money over time. There needs to be money printing when there are many liabilities like those, lots of debt, or even unfunded lobby obligations like pension obligations, health care responsibilities, or others, without any effective monetary policy to reduce interest rates and stimulate as we're talking about. The ongoing deficits are growing. We're going to enter a situation where bigger deficits are being monetized more and more, and the currencies devalue in that sort of setting. That is a simple strategy to avoid paying your IOU. Ray Dalio predicts that eventually, things will become worse. There will be a downturn in evolution during the following 1, 2, and 3 years. There will be a situation where political concerns, debt restructurings, and surplus capacity will all be factors. A significant barrack will be present in the upcoming American elections. In conclusion, Buffett claims that he is not enthusiastic about gold. In the past, people have believed that to be the first line of defense against a currency that was about to lose value. Yet a barrel of oil is also, and an acre of land is, likewise, a Coca-Cola product. We will have to charge twice as much for candy if the dollar drops by 50%. Consumers will put in the same amount of minutes or hours every week to purchase a 1-pound or 2-pound package of candy. We would much rather have an asset that will be valuable, whether the value of the currency is the same as it is now or 10% of what it is. People will continue to eat, drink, and engage in a variety of activities. Thus, their preferences will convert into actual financial value. Buffett would not swap the ownership of that sort of asset for a chunk of yellow metal, which has relatively little practical use outside of those seeking to leave the dollar and, in his opinion, haven't carefully considered the repercussions of where they should flee. Well, there you have it, a clashing opinion from two titans in the field of investing. How about you? What do you think of gold? Is it a valuable asset, or is it just a chunk of the yellow metal? Let me know in the comments below. Wow, was that news? Why not ponder it? Want to know the latest? Comment if you want more articles like this. This video is just one of many videos on my channel that brings you the latest news about the world of global finance and economics. So go hit that subscribe button if you don't miss out on content like these. If you enjoyed this video, please hit the like button. Thank you for all your support, and I'll see you again next time. Remember, 1 penny less a day keeps being penny less away. Cheers.